almost 2 years on now from when you first acquired the site. We've had a arguably 3 or 4 year upturn in terms of the London property market, and we are just within the M25 area here. Clearly a strong uplift in capital values over that period, and we're still seeing relative buoyancy, particularly in the southeast now in terms of demand. We're hearing day-to-day comments in the wider media about housing shortages, about a construction shortage, about the country is just not building enough homes. How do you see, first of all, the London market in terms of demand going forward from where we are now, and also pricing?
Blimey, right. Well, so demand, is there, and that's only going to increase. There's massive employment in London, obviously. So we've got people from other parts of this country wanting to come to London because it's where the major employment is, and of course we've got lots of people coming from other countries for similar reasons. So demand, of course, is massive, and it's only going to carry on increasing. Supply, of course, is fixed.
Yeah.
And can only be added to very, very slowly. So, purely as a result of that, I think the market will be, remain fairly stable. Pricing, is a different question, although of course it's related. I think things have definitely steadied off.
Yeah.
Particularly at the higher levels.
Yes.
Obviously, the stamp duty changes, made a big difference.
Yeah.
Personally, we were sort of lucky here actually because, we were nearly sold out around the time the changes came in,
Right.
and also, our highest value one is over there, which is I think was 1.3 million. So it doesn't really hit so much at that level.
Sure.
Once you get into 2 million quid. Plus, I wouldn't really want to be developing those at the moment, although we've got a few coming up. That market's definitely slowed down.
Yes.
And again, of course, in terms of the investment market, perhaps more for apartments. That of course is affected by the proposed tax changes. Indeed. A little bit as well. Yes, I think. Yes. So there's a lot of changing.
Yeah. And so from a development perspective, the issue, I assume, is being able to achieve those sort of margins that you outlined earlier, sort of 25%, ideally more, and making sure that you, obviously, in terms of site acquisition, you're paying the right price, and therefore, given that demand looks like it's going to continue and not fall off in the next year or so, it's just all about finding sites at the right price. And
it is, and I think the important thing with development really is this. You've got to be sensible and realistic. So now, personally, I'm very risk averse. I'm very detailed. I analyse things to the nth degree to hopefully have all of the angles covered. So we do a lot of market research to make sure we've got sensible sales values and make sensible assumptions in our appraisals from day one. We never assume anything about inflation and what the market might do and all the rest of it. So, but all of our appraisals, the deal works on day one, and actually we make sure because of the margins that we put into deals, it'll even work if the market takes a bit of a dip. If the market goes up, then that's just a fantastic bonus. But the important thing is, you can very easily kid yourself that a deal works when it doesn't. So particularly when you look at development appraisals. So the key thing is to be sensible and not to do that.